Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Make sure you have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator ready so we can do some easy math. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, welcome everyone. Happy Monday morning. We made it. Hope you enjoyed the weekend. Let's look at our open positions. First up, Boeing. Boeing had an upgrade today, so we are short call spreads on all of our positions, and they're all for December expiration. December expiration is about 29 or 28 days away, I think. So we'll keep an eye on all of these. Just a quick note, today will be the last episode for the week. I'll be off the rest of the week for Thanksgiving for travel. So we'll just leave all these positions open and follow up on Monday. The nice thing about trading options is you don't have to babysit these every single day, every minute of the day. You can go on trips and not have to worry. If anything, if these are really against us when we come back, we can always roll till January expiration. Okay? Let's continue. Boeing down big today. Microsoft, not bad, down $60 on our position. Same thing with SPY. This one's down big too. You can see it's up again today. Roku, down big as well. We're off about $160 on this one. That's all right. And same thing with Micron. Micron is in the green today, but still down $70 on that position. Like I said, don't worry about any of these. We have plenty of time to wait for a pullback, which would make all these more valuable. And if things keep going worse and worse, we can always roll until January, okay? Let's see if we can find some new positions. First up, Bristol Myers, BMY. So this one was down big earlier today in sympathy with Bayer, who had some negative trial data come out. It's affected Bristol Myers as well. So let's look at the put side on Bristol Myers. We may have already missed the move. I think starting now, we will only be trading January expiration, okay? We're 60 days till January. So we'll keep an eye on our December positions, but from now on, we'll be opening January positions. For Bristol Myers on the put side, which is what I'd like to open, the 45 is too close and the 40 is too far out, so we'll skip that one. And on the call side, you don't really get paid for it. Okay? You'd have to sell the 55. Next, Uber. Earnings are in February. The chart on this one has been a rocket ship up, straight up. $59. It could catch resistance anywhere between here, 55 and 59. Let's look at the call side on Uber for January. Good liquidity here. The 60 is awfully close to sell. Let's just do the math on this one. If you sold the 60 and bought the 65, that's 115 minus 39 divided by 2 divided by 500, 7.6% return. It's interesting. We'll make a note of Uber. January's a lot of time from now until then. On the put side for Uber, if you sold the 47.5 and bought the 42.5, that looks like a worse deal. 59 minus 21 divided by 2 divided by 500. Yeah, only 3.8%. So the call side is where you get paid. Next, Disney. Maybe there was some news this morning on Disney. Today's the 20th, yeah. Outperform. February earnings are next. Okay. On the call side, if you sold the 105 and bought the 110, 73 minus 34 divided by 2 divided by 500, 3.9. No good. On the put side, if you sold the 85 and bought the 80, that's 59 minus 26 divided by 2 divided by 500, 3.3. We'll take Disney off. Next, Citibank, C. All right. In the news today, maybe. Earnings are January 12th. So, Citigroup CEO announces management changes, difficult decisions, layoffs. So, earnings are mid-January, so that'll be included in this option contract. Hitting the 200-day. If you sold the 50, bought the 55, that's 61 minus 14 divided by 2 divided by 500, 4.7. That's actually not bad for a bank. On the put side, if you sold the 41 and bought the 36, you got 47 minus 14 divided by 2 divided by 500, 3.3. Pass. Next, KB Homes, KBH. Down 2% today. Earnings are January 10th. Let's keep that in mind because that will be part of this expiration. We've got downgrades to neutral. Just one at Wedbush. Here's our chart. Okay. No volume here. That's concerning. We've got a lot of open interest, but not a lot of volume. On the call side, same thing. Not much volume. Let's see. Who else? We can check out Lennar. No volume in Lennar. DR Horton. Not a lot of volume here either. Okay, we'll skip the home builders. Next is Penn, PENN. Up 5.5% today. I don't believe this is earnings. Earnings are February 1st. Upgrade at B of A. That was why. Let's look at the chart. Hitting the 200-day. Just look at this channel downward. Almost a year. Selling the call side seems interesting. If you sold the 32.5 and bought the 35, you can't buy the 37.5. Look at the spread. 7.64. It's too illiquid. But the 35 is liquid, so if you did a $250 spread, that's 31. 31 minus 17 divided by 2 divided by 250. No, never mind. 2.8%. Close but no cigar. On the put side, if you sold the 20 and bought the 17.5, 25 minus 8. Divided by 2, divided by 250. Same thing, 3.4%. So we'll skip Penn. Palo Alto. I think they're just post earnings a couple days now. Earnings in February. Yeah. Chart. Near all-time highs. On the put side, for January expiration, if you sold tough one. If you sold the 220, bought the 210, that's 185 minus 110 divided by 2 divided by 1,000. 3.7% on the put side, no good. On the call side, if you sold, you'd sell the 280s awfully close. Sell the 280 by the 290. Yeah, that's 357 minus 201 divided by 2 divided by 1,000. That's 7.8%. So you get paid more to sell the call side, which makes sense. A very bullish chart. It's okay. It's interesting. I'd rather wait for a bigger movement up to maybe around 275 and then sell a call spread. Yeah, 275 and sell a call spread. Maybe we'll keep this one on the list. When we come back next week, Monday, we'll follow up with this one, okay? Next, let's go to Square. Block. So post-earnings move, continual move upward. It's coming close to the 200-day moving average. Next earnings are February 22nd on the call side. If he sold the 70, bought the 75, that's 86 minus 43 divided by 2 divided by 500, 4.3% there. On the put side, if you sold the 50, bought the 45, that's 92 minus 39 divided by 2 divided by 500, 5.3%. That's not bad. $50 on the chart. That's awfully close for January expiration. Yeah. Okay, let's look at Coinbase next. We'll follow up on a couple stocks from last week. Post-earnings move, the gap up and the continual move up. Next earnings are February 20th. On the call side, if you sold the 130, bought the 135, that's 385 minus 312 divided by 2 divided by 500, 7.3% there. Okay, and on the put side, if you sold the 75 and bought the 70, it's 186 minus 127 divided by 2 divided by 500, 5.9%, almost 6% there. So again, you get paid more to sell the call side. And again, that makes sense. You've got a lot of momentum to the upside. All right, next is Airbnb. Okay. On the put side, if you sold the 110 and bought the 105, it's 142 minus 90 divided by 2 divided by 500, 5.2% there. On the call side, sell the 150 by the 155, 133 minus 84 divided by 2 divided by 500, 5%. We're going to go ahead and take Airbnb off the list. Next, Applied Materials. What did they have earnings last week? Yeah. On the put side, if you sold the 130, bought the 125. That's 121 minus 76 divided by 2 divided by 500, 4.5%. And on the call side, skip the call side. If you really want to sell the 170, buy the 175. It's 118 minus 70 divided by 2 divided by 500, 5%. We're going to go ahead and take applied materials off the list. Next will be XOP. Oil's up today, I know. Still hanging out here in no man's land. On the call side, if you sold the 155 and bought the 160, it's 152 minus 87 divided by 2 divided by 500, 6.5% on the call side. On the put side, if you sold the 125 and bought the 120, 134 minus 83 divided by 2 divided by 500, 5.1%. It's okay, not bad for an ETF. Good liquidity here too. Expedia, EXPE. This is a follow-up from last week. Holy smokes. Call side. I know the 150 is too close and the 155 is too far out. The put side, I don't want to sell the put side, but same thing. The 120 is too close and the 115 is too far out. Let's move on to Target. TGT. Earnings at the end of February. So we had our big gap up and not a lot of movement. When you have not a lot of movement like this, that means volatility's all been sucked out, which means the premium's been sucked out. There's probably no more move left to make. On the call side, if you sold the 140, bought the 145, it's 147 minus 75 divided by 2 divided by 500, 7.2% if you sold the call side. The 140 is awfully close. On the put side, if you sold the 115 and bought the 110, that's 90 minus 50 divided by 2 divided by 500, 4%. So you get paid more to sell the call side. It's just that this 140 is awfully close. 140 on the chart is right here. And we've got a long time. We got 60 days till expiration. If it moved up a little bit more to like 135-ish, then I'd consider selling the call spread. So let's hold on to this one till next week. When we come back, if it has moved up, we will sell the call spread. So we'll wait on this one. All right, next let's go to our IV rank scanner and sort by volume. Look at the IV rank of the SPY. It's 2%. Nothing. NVIDIA earnings are tomorrow after the close. I won't be here, but they should be exciting. Hopefully there's some big movement. I won't open any positions while I'm gone, but I'll check in each day and just see what's happened. SoFi, $7 stock. The TLT, we're not going to check on the TLT today. Hardly any movement. AI. Actually, let's check out AI. There's some news this morning and over the weekend about them and Microsoft. I'm surprised they're up so much. Or maybe it was a different Microsoft AI issue. Go to Microsoft really quick. OpenAI, that's why. Never mind. Back to AI. This is C3 AI. Earnings are December 6th. We're too close. Let's move on. $3 stock. Penn, we already looked at Penn. Nope. UNG, I'd rather do XOP. Zoom has earnings the 20th after the close. Okay, so tomorrow morning, if you want to follow up with the Zoom, I will not be here. I'll be at the airport. Snowflake has earnings on the 29th. Pfizer, no. What is this one? YPF. Let's check this out. YPF. No news. Earnings are March the 7th. Maybe earnings were today. Let's look at the options. I don't know this one at all. On the call side, nothing. Ivy rank. Hold on 1 second. 75. Okay. Let's look at December really quick. No. All right, let's move on. Skip this one. The KRE. I think banks were down today. Just hanging out at the 200-day. Maybe on the call side. If you sold the 50 and bought the 54, that's 50 minus 14 divided by 2 and divided by 400, 4.5%. That's not bad for the KRE. I'm going to skip the put side. You'd have to sell the 40 and buy the 36. That's 57 minus 20 divided by 2 divided by 400, 4.6% there. So if I had to pick, I'd rather sell the call side than the put side. Or if you like both, sell the condor. Where's 50 on the chart? 50's all the way up here. Actually, I kind of like this one. Hold on 1 second. 50. One more time. 49 minus 14 divided by 2 divided by 400. 4.3%. That's not great. I wish it was more. All right, we'll hold on this one. Next. Spirit. Nope. Kohl's has earnings on the 21st. That's in 2 days. Bristol Myers, we already looked at. GameStop. Earnings are December 7th. We're going to skip GameStop. General Motors. We'll skip. Macy's is post earnings. It's a $14 stock. We'll skip. Advanced Auto Parts. They've had one ugly chart this year. Oh boy. Have to go out to the weekly to see how far back this goes. Back to 2011. 47. Ay, ay, ay. On the put side, if you sold the 42.5 and bought the 37.5, just not a lot of liquidity here. Close. This would have been very interesting. Back to the list. USO. Let's check out USO first. Kind of still stuck in no man's land here with oil. On the put side, you sold the 62 and bought the 57. 89 minus 45 divided by 2 divided by 500, 4.4 on the put side. On the call side, skip the call side. The 80's too far. The 80's too close, and the 85 is too far out. Okay. Food is up. Is this post earnings? 11:23. This is not. Earnings are on the 23rd, so we'll skip this one. Adobe's too big. Costco's too big. Pinduoduo. Let's look at Pinduoduo and then CRISPR. Earnings on the 27th. We will skip. What was this one? CRSP. Earnings are on the 20th. Here's our chart. It's a rocket ship. On the call side for January. Oh boy, if you sold the 100, bought the 105, it's 360 minus 287 divided by 2 divided by 500, 7.3% there if you sold the call side. Not terribly liquid. You got some open interest, you got some volume here. On the put side, you'd have to sell the 50. Skip the put side. Okay, let's go back to Uber. Getting close on Uber. Is the strike past the 60? No, the strike is the 60. The 60's too close and the 65's too far out. And Coinbase one more time. $135. Maybe we'll do this one. If you sell the 140 by the 145, that's 283 minus 235 divided by 2 divided by 500, only 4.8%. You sold the 135 and bought the 140, 342 minus 283 divided by 2 divided by 500, almost 6% there. I think we're just going to leave our positions that we have open. We'll leave them open for now. We'll take the week to see what happens, and we'll come back Monday morning fresh and see if we can find some new opportunities. December's a fun month. Usually very low volume, but we'll see what happens. We'll have a Fed meeting in December too. All right, that'll do it for today. Don't forget, we'll be off the rest of the week for Thanksgiving. We'll be back Monday morning, 7:15 a.m. on the West Coast, 10:15 a.m. on the East Coast. Tune in every day. We'll all trade options together. Have a happy Thanksgiving. Enjoy. We'll see you all next week.